Have you ever caught yourself thinking, how can I invest? How can I get started? You might be a little scared. You might think it's risky. Well, perfect. This is a video for you where I'm going to discuss how to begin investing. We're taking little, I'm not gonna say baby steps, but small beginner steps to get your investment muscles working, get the blood flow going, and then this opens up a whole nother world for making money. Stay with me. Why invest? Well, I'm glad you asked that question. Simple. Keeping your money in the bank is not making you money. You can go back and check my video on that. The banks are actually making money off of your money while you are losing money due to inflation and the very minimal percentage that they're supposed to be giving you, which doesn't even cover inflation. So you're actually losing money. So why not take that money and invest it, right? Why not make your money work for you? That's a smart thing to do. So I'm glad you actually clicked on this video and open up your mindset to making more money and investing money. So I have my notes here off to the side, so don't mind me if I look over to the side. But I do want to start with, before you start investing, you have to make sure you have your emergency funds in place. Why? Because it will save you from stress and anxiety. Not saying that investment is a risk, but when you do invest and you do it steadily and consistently, it's pretty much you put your money off to the side and you don't touch it. You don't think about it. You just know it's there and you know it's growing. So if something happens, an emergency comes up, you have to take care of anything, you have an emergency fund there to fall back on and you don't touch on your investment funds. Okay, so this is very important. You have your emergency funds in place. I believe I do have a video on that. I will check, but if you guys want to know more about emergency funds, let me know or comment down below and we can discuss that. So pretty much the investment funds you put off to the side and you do not touch. Emergency funds, 3 months of your expenses. Houses, cars, food, whatever that number is, multiply it by 3 and you should be ready to start investing. Some people like doing 6 months of emergency funds. I mean, whatever makes you happy. If that gives you more or lets you sleep better at night, go for it. Some people say a year. I think that's a bit excessive because it's going to take a long time to get there, and then it's rare that you would need that long of an emergency funds. I think 3 months you should be good to start investing, okay? So you make the decision at the end, it's your choice, but definitely have your emergency funds in place. The other step before you start investing is keep your debt low. Whatever it is, take care of your debt. I'm not saying you have to pay them off completely, but definitely keep them below 10% because the investment we're going to be talking about today have a yearly return of 7 to 10%. Okay, so if you owe 20%, credit cards will go up to 29%. So if you owe a lot of money on that and you're paying 20%, 27%, 29%, you're pretty much canceling off what you're making and then you're still owing money. So this is also important. Keep your debt low. If you want to cancel out your debt and just take care of it, even better if you don't need it, okay? And then we'll get into investment. And here is the nitty gritty, okay? Again, I'm just looking off to the side here. So where to invest? Again, we're doing baby steps. We're gonna talk about stocks, index funds, etc. That's the route we're gonna take. It is the more boring route, but it is been proven that it works and you will get a return. And this is what the rich people actually do and have plenty of, okay? I'm not saying there's no other way to make investments. Obviously, you can do real estate, you can buy homes, you can flip the homes, you can rent them. All of that is valid and it does make money, okay? But today, we're gonna beginners. Very simple. So what we're going to start is you're going to open up an account, a brokerage account. Just think about this account as a place where it holds your investment. That's all it is, an account holding your investment where you're going to invest, right? One of my favorite accounts is Fidelity. You have Fidelity, you have Vanguard, Charles Schwab. There's a whole bunch of them. You can definitely Google this information and then decide whatever you think works best for you or whichever one, you know, catches your eye. To me, I like Fidelity. This is not a paid video. They're not giving me any money to say this. I just use Fidelity personally myself, and I just like how the system works, their apps. I'm used to it. I like it. But again, you do your own research and pick whichever one you can. It's very simple. It's like opening up, I think it's easier than opening up a checking account, to be honest. So make sure you have that. Then once you have that, your investments, right? I said we're going to talk about stocks. We're going to talk about bonds, index funds. So stocks, They say it's medium risk because it goes up and down. You might have to sell or you can hold, but it's, again, been proven that over the years, over time, even though the line goes like this, up and down, it is gradually going up in an up and down line, okay? So, and then you own a piece of a company, all right? So with bonds, what happens is it's a low risk, and you pretty much think of it as lending money to companies or to the government. Pretty much what that is. Again, I'm not gonna go into details because it'll make the video too long, but you can definitely Google this. So we have stocks and bonds, and then my personal favorite right now, which is index funds, ETFs. Pretty much low to medium risk, and you own, instead of one company, you own pieces of hundreds of companies. So you really can't go wrong, you know, unless the United States crashes. Now, what are the chances of that? Can it happen? Yes. Will it? Probably not. You know, very, 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 very rare thing that can happen, right? And even if it does, like 2008 or whatever it is, it comes back up, okay? So just keep that in mind. Don't stress over it. You're gonna be okay. All right, so index funds is what we're gonna choose today. So the yearly return on this is a 7 to 10% return on your investment. So we're not even gonna think about that, right? We're beginners. So we're gonna start, what can you do a month? What can you do every week? Can you do $20 every week? Can you do $50 a month? Can you do $500 a month? This is what's going to happen. This is what's the important thing, okay? It's not, obviously the percentage on the return is important, right? But what we're going to try to do is get our investment muscles working, get the blood flow going. You want to start thinking about investment. You want to start doing your research on what are index funds. You want to start doing your research on stocks, etc. This is what we want to try to do, okay? But you're covered because you have your emergency funds and you have low debt. So the money that you're using right now is pretty much play money, leftover money that you can invest, that this money is going to work for you, instead of keeping it in a bank account where the bank uses it for them and you're losing money because of inflation, and the percentage that they give you for keeping the money there is really not worth it, okay? So this is a much better way to multiply your money. So think about this. You have a pile of money here, and then that pile of money brings in a small amount of money, right? And then that small amount of money grows into a little bit bigger amount of money. So now you have a little bigger one and a real big one. And then they start growing, and then it compounds and it just becomes big money. It does take time. You have to be patient. But what we're trying to do here is be consistent, build that muscle, and getting used to investing and taking out money to invest. Now, the goal here is to take 10 to 20% of your income for investments. If you can get to that point, you're going to be good. Trust me. You're not going to have money issues unless you don't manage your money correctly. So 10 to 20% of your income is the goal. But right now, we're not thinking about any of that. Think about a small number that you can start with. You can start investing and go from there. Again, this is going to open a whole new world for you. Let's talk about what to avoid. So once you have your investment, you picked out your fidelity and you picked out the number you can do every month, which hopefully if it's low, you can grow on that every year. What not to do? Do not jump on trends, okay? These are small, steady, consistent investment that you're doing that you're not even going to think about. If you can do auto payments to this thing, go ahead and do it. Take out your 200, 300, whatever the number is that you can do every month, throw it in there. Don't think about it. If you have extra money coming in that you don't need, throw it in there. Don't think about it. Next thing you know, you're going to open your account. But you're going to open your account, you're going to say, where did all this money come from? Where does all this money come from? Okay, but it takes time. Okay, so do not jump on any trends. Do not jump on the trends saying this stock is going to blow up. I mean, can it happen? Yes. Will it happen? That's a risk that you're going to have to do your homework on and see if you can take. Okay, I don't recommend it, at least not in this part of our investment journey. Stick to the game plan is the key. Okay, so do not jump on any trends. Do not jump on crypto. Do not jump on crypto starting off right now. I'm letting you know right now. And I already said do not check your investments every day. Leave it alone and forget about it, okay? So we're going to do a little recap here on what we have done today to get you started, okay? First of all is you're going to build your emergency fund so you're not stressing about money, so you're covered if any emergency comes up. and you have that nice cushion that you can sleep well at night. We're not making any, taking any risky moves, so you should be able to sleep fine at night. Paying down your debt. If you have high interest rate debt, pay that down before you start investing. Again, if you owe a lot of money, the money that comes in from your investments pretty much being canceled out by your debt, and then we're just going in circles at this point. And that's not what we're doing. That's not what we're doing, guys. All right, then you're gonna open up your brokerage account. Again, you can Google this stuff, do your research, pick the one that works for you, pick the one that you like best, and then go from there. And now we're gonna decide how much money we're willing to invest and how we're going to invest. So we're going to invest it in index funds or EFTs, etc. And then you're going to automate. If you can automate that number that you chose that you can do every month, go ahead and do so. I recommend checking these things every 3 months, every 2 months, just so you can see how it's growing, how it's going, etc. Not a daily thing, okay? This is not a race. This is a marathon. I'm letting you guys know that now, but it is good to have. You guys will thank me in the long run, okay? Just be patient and let it grow. So if you guys thought this video was helpful and is gonna help you in the future, please give the video a nice thumbs up. Leave your comment down below saying I am starting today, which will make me feel great because that's the whole point of this video, of this channel, is just to open you guys up to investing in a whole nother world if you guys haven't. And remember to subscribe to the channel because I will be discussing everything finance, everything wealth, and health. I have other videos saying that we need those 3 pillars in alignment to be successful in life. Okay, so make sure you subscribe to the channel, give the video a thumbs up, and leave your comment down below. I will catch you guys on the next one. Every week I upload a video, so I will see you guys next week.